subsequent events. See, subsequent events under the something is happening after something. That means there is a cutoff timeline that you're taking, and things are happening after that. And the case you need to figure out what exactly to be done. Now you have, let's say you have completed your audit. Let's say you have completed your audit. Now there are two situations. One is your financial statements are being issued. Okay. So you have completed the audit, but you have not prepared the financial statements, or you have prepared the financial statements and submitted. So what to do in these scenarios? So what happens when the audit is over, but before financial statements, after financial statements? So in these case scenarios, what exactly an auditor is supposed to do if there are certain facts and information that come to the limelight? So let's see what exactly they talk about here. See, first they are saying events occurring between the date of financial statements. The date of financial statements will be 31st March 20 whatever FY 20XX right now. Correct? So the date of events occurring between the date of financial statements and the date of auditor's reports, and also the facts that become known to the auditor after the date of the audit report. So one is they are saying before the audit report, and one they are saying after the audit report. Before the audit report Abdina, naturally it has to be after the date of financial statements. What is the date of financial statements? In India, at least it is 31st March. So after 31st March, you're getting to know about certain information, and you have already issued the audit report, Abdina. This falls under this facts that become known to auditor after the date of the audit report. Now, the financial statements date is over, but the audit report is yet to be issued. All these things are discussed in this standard. Now, this need not necessarily be 31st March, because when you have a quarterly closing, you can still have 30 June. The 4 quarters that you can think of. So these are the 4 quarters we have, right? So financial statements can be issued for all these 4 quarters. So any of these 4 quarters completed, but you are going to issue audit report means you will be issuing for a specific period. So the date of the financial statements will be the last date of that period, isn't it? So if you are issuing a full year report, it will be 31st March. If you are issuing only one specific quarter, then depending upon the quarter, you will issue the financial statements and the audit report. So the split has been made from the date of the financial statements. After that, before the audit report, you get to know some information. And after the audit report, you get to know some information. Let's see what they are expecting us to do. So first, auditor's duties. What exactly have to be done? Events occurring between the date of the financial statements and the date of auditor's report. If Technically, what we have to understand is the entire audit is a subsequent event. The audit by default is a subsequent event because it is happening after the financial statements date, the date of financial statements, isn't it? We are not live monitoring. Audit is not never a live monitoring. We come in place only after the events and transactions happen, isn't it? So once the 31st March closing is done, that's when we are invited to carry out our audit. So by default, audit itself is a subsequent event. So what exactly needs to be done? Here they're discussing events occurring between the date of financial statement and the date of auditor's report. The first one, perform procedures to obtain sufficient appropriate audit evidence that all events which require adjustment disclosure have been identified. Okay, let's first take some examples so that you can have a better clarity. Examples you can think of: change in provision for so these are the some of the examples. In the மாதிரி நிறைய examples கொடுக்கலாம். So just the tip of the mind, these are the things that I have on my mind. So you can think of this. Let's say as of 31st March, you were thinking that this particular vendor, no, not vendor, customer XYZ will pay. Okay. As on 31st March, you were thinking that customer XYZ will pay the amount. The due date is falling on 1st April. He is not paying. It is already June, but he has still not paid. And finally, they filed for bankruptcy. அப்படின்னு வச்சுக்கோங்க. So what happens to that number that is lying in sundry debtors at the time of 31st March? Even in the provision also they did not consider because this customer has been paying. So naturally now when you are issuing an audit report now, you got to know something which was not prevalent at the time of the financial books closure, isn't it? You got some information which was not available at that time. You got some additional information or new information or a change in situation circumstances because of which there may be a requirement for a additional disclosure, or there may be a requirement for some change in the financial statements, so that the end users know what is the exact scenario. So as of 31st 2022, if you ask people, they would have said, yes sir, it is recoverable, the customer is a good customer, they generally pay on time. But what happened in June, the scenario changed. The customer has filed for bankruptcy, so they don't have money to pay. Now, this is something that got into your notice before you are issuing the audit report. Okay. So now how do you act upon this? Now think of a legal case. So just assume there is a legal case that is filed against the company. Initially, maybe in the month of January, when the hearing was there, initial hearing was there, we were thinking that the company was thinking that they don't have any liability because it's a small case, they will not argue much அப்படின்னு அந்த மாதிரி சுச்சுவேஷன் ஏதாவது இருந்ததுன்னு வச்சுக்கோங்க. பட் அப்புறமா பிகாஸ் ஆஃப் தி ட்விஸ்ட் அண்ட் டர்ன்ஸ் அந்த கேசஸ் அது பெரிய அமௌண்ட் ஆயிடுச்சு. And now they are looking at a liability of 5 lakhs, just assuming, okay? So this till 31st March, they were not having any idea, any thing that this will go like this. But after 31st March, say, let's say April or hearing irundhudu. And the April hearing la the situations and circumstances changed, and this is what they are looking at right now. அந்த மாதிரி instancesல now you need to disclose that there is a 5 lakh liability, right? The financial statements will not represent this 5 lakh liability, but now in the audit report you need to see whether this disclosure is required to be made or not. Result of voting, some special resolution was required to be passed. See, some special resolution was required to be passed 31st March முடிஞ்சிருச்சு. அதுக்கப்புறமா board meeting நடந்த board meetingல they convened AGM and general meeting, not AGM, general meeting, and say they had some special resolutions to be passed. But let us assume they whether they passed the special resolution or whether they failed the special resolution. Auditor needs to think whether this special resolution, there is the discussion point or the result of that special resolution, will it have any impact on the operations? Will it have any impact for the end user? Does the end user need to know about this? அப்படின்றது they need to think about. Now, amalgamation, demerger, all of these are decided not based on the financial statements ending, right? Most of the time, the financial statements period will not have an impact on the merger demerger, but if they have decided to go suddenly, they may be initiating the process. Sometimes it takes years to pull across the data and finalize on the either the IPO or the merger or the demerger. But these things may happen at any point of time. So assuming there was no discussion about this before 31st March and suddenly they're talking about something like this. So obviously it needs a mention in the financial statements disclosure somewhere saying that the management is considering or something. But not necessary that all considerations needs to be reported, because sometimes some mergers or some acquisitions cause panic in the market. Let's say when recently Microsoft bought a company called Activision Blizzard. So that is a video game company. Now what has happened is just before Microsoft bought that company, who is this guy? Warren Buffett. Warren Buffett has invested close to $1 million in the stock of that company. So what has happened is now people are blaming Warren Buffett, saying it's an insider trade. So they are saying that Warren Buffett was aware that this transaction was going to happen. That's why they had purchased 1 million worth of shares. But a preliminary analysis shows that Buffett reacted even before Microsoft had that thought. Okay. So these things, think of it from Warren Buffett's company's financial statements, Berkshire Hathaway. So in their financial statements, does the auditor have to report that there are allegations against the company for insider trading, but the action taken by the company was way before Microsoft even had the thought of doing it? Or in the Mari, what was the reason for Buffett's actions? In the Mari, the disclosure under the auditor needs to think, because the financial statements, when they are released and people will expect something about this, or people will expect a discussion on this, people will try to read through the financial statements and see what exactly caused Warren Buffett to take that action. So all these things, this is very recent. I'm talking about the last 1 month the scenario. So instances like this will have impact, because in US it is a Jan to December closing most of the time. So their December financial statements closed, and by March they'll be probably having the audits and audit reports. So this is an event that is happening after the financial statement date, that is the 31st December, but before the audit report date. Now, how these events are represented in Berkshire Hathaway, the Warren Buffett's company, the allegations about insider trading. Now, how these activities will be reported in Microsoft's books, because there is a amalgamation process. Microsoft has bought out Activision Blizzard, that is the video game company that we are talking about. So how these things will be represented in Microsoft books? This is what is basically all subsequent events is all about. Or otherwise, you can also think of things that affect the going concern. Management is looking at stopping the operations of the company, or management. There is some natural calamity which no event was there on 31st March. Last year would have been the perfect. 2020 would have been the perfect example for this. Till March 31st, Corona under Varta Corona under pair, and we were thinking of it as a foreign country event. But once it started hitting the Indian shores, it changed the whole scenario in a few days, isn't it? The government taking proactive actions. So all that, it had a big impact. So all these things by default, if you see, every financial statement from the year 2020, all those financial statements which were issued after the corona in 2020 by default had a big paragraph about corona, about the COVID situations. And it has become normal to see the word COVID in reports everywhere these days. Terms and conditions, reports, everywhere you are seeing this. So this, you need to tell the investors that there is an impact because of the ongoing global pandemic. You need to tell them how exactly it has affected the operations of the business. Now, some companies, they were struggling. Okay, it was visible that they were struggling, but for some companies, it's serious. It was a sixer on sixer, because if you see, all the IT services companies in India grew by an average of 50% in the last 1 year. And from 2020, they grew by an average of 80%. It was a report that came out yesterday. All the IT services in India, they grew by average of 80% in total valuation in 2 years. Just imagine growing by 80%. That's a very significant value. The numbers are in billions. I'm talking about numbers in billions. So these things will have a significant impact. You need to tell out to people saying, even though there is a pandemic. So think of something like Tata, TCS, or something like Apollo hospitals, where Apollo will say that they had, because of the COVID, the surgery side income will reduce, but their COVID side income will increase. So there will be a slight set off, and still they might remain profitable. But think of IT companies. IT companies, there was very less possibility for revenue reduction. On top of that, there was a possibility of cost reduction for them. Not just revenue increase, they had double benefit of cost reduction also. On one side, the revenue increased, on the other side, cost decreased. So this was a very significant phase for the IT companies to boost their revenues like anything. So in their financial statements, it will be all about how the revenue has increased, how the cost has reduced, all that stuff they will talk about. And then think of companies like Zomato, Swiggy, even in Abanona, they'll say initially for few days where lockdown was there were challenges, but later on, the government allowed for deliveries. They will give the explanation, and auditor needs to ensure that these explanations are actually in line with the results of the organization. Also, those natural calamity and think of earthquake. 31st March வரைக்கும் எதுவும் இல்லை, but in the April month there was a big earthquake, and warehouse company or a warehouse completely got destroyed. So you need to give a disclosure saying company's warehouse asset worth so much of amount got destroyed, and it needs a complete repair, and there'll be so much cost incurred for that. All of that you need to ensure that those people, the company, is disclosing. So with respect to that, let's see what exactly is discussed. First, perform procedures to obtain sufficient appropriate audit evidence that all events which require adjustment disclosure have been identified. So first, your duty is to identify those subsequent events which were not there at the time of 31st March or at the time of the date of financial statements, but have come into the limelight after the 31st March. Next. For the purpose of determining nature and timing of procedures, auditor may. So first thing is identification. Once you have identified, what do you need to do? Obtain the understanding of procedures applied by management for identification of significant events. How is management identifying them? Next, inquire the management as to occurrence of subsequent events which may affect the financial statements. Talk directly to the management and ask them if they have identified any subsequent events. Then read the minutes of meetings that were held after the balance sheet date. So naturally, if there are any significant events that were discussed, study the interim financial statements, if any. In the interim financial statements, if any 31st March முடிஞ்சிருச்சு, அதுக்கப்புறமா interim financials also have been issued. So in those interim financial statements, was there any requirement or was there any information that was disclosed under the Pata? You will know whether what to be disclosed for the annual report, what not to be disclosed. So next, if auditor identifies any event which require any adjustment disclosure, he should ensure that its appropriate treatment is there in the financial statement. So naturally, if there is a subsequent event which is significant and material, naturally that affect the entry or provision or disclosure, something must be there in the books. So that the auditor needs to ensure. Next, obtain a written representation from the management that all known events have been appropriately adjusted, disclosed as the case may be. So, see, this is one thing that we all need to remember. Here, they said inquire the management. Okay. Here, they are asking them to give it in writing. Here, they're talking, first one, they're talking about asking the management if there are any subsequent events that the organization has identified, that the management has identified. But here, their answer may be a little different, but when you ask them to put it in writing, we are asking a written representation from them. We are asking a written representation from them. So when we get a written representation, when you get it in writing, then you will have a higher stand on it, because even if anything happens, auditor can produce it in the court of law and say, this is the written representation I have received. So they did not confirm me that this event was there, and they did not provide details of this event, so I was not aware. Abhina, auditor can take a defensive stand. So basically, what is happening? So basically, what is happening, Abhina? If there is an event that is occurring between the date of financial statements and the date of auditor's report, first they are asking you to identify. If not, they are giving a list of means and procedures in which you can identify. So, and then after that, they are asking you to ensure if anything is identified, they are asking you to ensure there is appropriate accounting treatment for that. And then finally, they are asking you to ensure there is a written representation from the management on this aspect as well. So when you are discussing with the management, here they said inquire with the management as to the occurrence of the subsequent event. So what inquiries can be made under the, or a few guidelines have been given by ICA. What are those guidelines, Abdina? They are saying specific inquiries that can be made. First, whether new commitments, borrowings, or guarantees have been entered into. So that means this will say whether there is a significant change in loans and advances, either as an asset or as a liability. Yeah, has the company given any loans and advances, or has the company received any loans and advances? Have the company given any guarantees, or has the company received any guarantees? Or has the company given any guarantee on behalf of a third party? All these things which were not there at the time of 31st, but now after 31st, these things have come into the play. Whether sales or acquisitions of assets have occurred or are planned. So it could be either assets, when they say sale or acquisition, it could be either assets, that is the fixed assets or intangible assets, or it could be a entire business itself. IBM recently sold off much of their IT services. They wanted to sell off some divisions of their IT services to focus on their core competencies. So this will definitely come in the financial statements of IBM for financial year 2021-2022. So these things will be reported. So just like that, you need to ask them, is there anything that you have planned? Is there a requirement for such disclosures? Now, any capital increase or debt increase or any issuance of new debt, all that also needs to be discussed. Because this will have an impact on the changes in the equity or changes in debt structure disclosures. Next, whether any assets have been appropriated by government or destroyed. So government on the, you have this call. I'm not sure, but I think it is AS13, which is government grants. The government has given but has taken it back, or government has issued a new grant which was not there at the time of 31st March, but you have received it. And oh my God, the best subsequent event that you can think of is declaration of dividend. So declaration of dividend is always a subsequent event because at that time you don't know what will be the dividend, but you know that the dividend is going to happen. So you could say that this is what has been discussed by the management, and this is when the dividend will be declared, or this is what management has in mind. All that related disclosures might be given. Next, whether there have been any developments regarding contingencies. Contingencies, again, they're talking to about accounting uncertainties, accounting estimates, contingencies. All these fall under the same umbrella. Any event or activity where there is unsurety, where the company is not sure. Earlier, the company was not sure, but now there is a clear-cut direction. அப்படின்ற கேஸ்ல you need to tell whether the situation is favorable, whether the situation is unfavorable, in what direction the contingency is heading. Under the you need to disclose. Whether any unusual accounting adjustments have been made. This anyways the auditor will get to know. So you can get these details from the books of accounts itself, the trial balances, the adjustments that are done. Next is whether any events have occurred that will bring into question the appropriateness of accounting policies used in the financial statements. There is a possibility of a lot of accounting policies that can be going wrong. One basic one is the going concern. Going concern is also an accounting policy. Or you can think of some fraud happening in the organization, which was identified that the CFO was personally involved, but none of the other management was aware of, or they were not aware of that. So what will happen now is that now the very financials that were prepared, the base data itself will be under question. Whether these people have manipulated too much or how much of manipulation has happened, how much of fraud has happened, all these questions will start to arise. So when these things happen, there will be definitely a significant lapses on the accounting policies side. So those needs to be evaluated. Events have occurred that are relevant to the measurement of estimates of provision. So that's the point that we were talking about in 5 contingencies, estimates, provisions, uncertainties, whatever they are. They, if there is a solid direction, either positive or negative, but if the contingency, provision, estimate, uncertainty all mean the same thing, you don't have a solid response, isn't it? But when there is a solid response that is forming, whether good or bad, then since it's a solid response, you can take something and you can actually do some disclosure out of it. Otherwise it will be talking in the air. That is what is our estimates and provisions and uncertainties are. Next, whether any events have occurred that are relevant to the recoverability of assets. Assets recover எப்போ பண்ணணும்? If someone has filed for bankruptcy or someone is not paying, making a payment, or recently there was one transaction I've seen. Indonesia or power distribution company the owner or the investor is here. Now, what has happened is they were supposed to sell that company exactly at that point of time. Just when they were about to sell that company, I think the government of Indonesia got to know that news and they immediately passed some regulations, because of which these people were stuck in a legal trouble and they couldn't sell the power company to certain parties or the party that they were thinking of selling. Now, what has happened is because of this, the transaction entered into a legal logjam and neither parties could move ahead. And this was continuing since the last 2 years. They were showing a big provision in the books for almost $3 million was the provision amount in the books. But recently, in the latest financial statements that I got, there is a provision saying the talks with the government were successful and these people went and discussed with the Indonesian government and the government has given a written document saying that they will be working with both the parties to make this happen. So when the government has given a written document that this has happened, there is a higher guarantee that this is going to go through and the recoverability question varakudadu yen abdina the government guarantees them, but still you need to be a little doubtful because governments they don't always stick to their words, and certain governments like Indonesia, Malaysia, they keep playing around because of the political tensions. On one side India keeps influencing, on one side China keeps influencing them, on one side US tries to influence them, on one side there is Australia and Japan which are trying to influence them. So these countries, small countries, what happens is they are played around like balls. Even India plays around with some of the countries. Malaysian Prime Minister was doing too much overaction. So the Indian government played a game with respect to the imports, and they said don't import from Indonesia. I think it was with respect to sugar or something. So Indian government completely banned import from Indonesia, and Indonesia suddenly was struggling. They were all that time the Indonesian Prime Minister was, jumping up and down against India, talking about Pakistan and Kashmir issue in the international market, everything. But when India stopped the imports, suddenly the Prime Minister came down to his knees. It went to such an extent that the Prime Minister had to resign. The Indonesian Prime Minister had to resign because the what is that? Industrial group was pressurizing him either to apologize or to resign, and the Prime Minister had to resign completely just because India was putting pressure. So things like this can happen with respect to the government. So these things needs to be discussed whenever there is a recoverability issues that can happen. So these things need to be disclosed. So here, the first thing that we need to understand is if it is before the date of the auditor's report. If it is before the date of the auditor's report, the only thing that you need to do is identify if there is any subsequent event, then try to figure out if these are the ways in which you can figure out if the subsequent events are happened. Then if there is anything, all you need to do is ensure there is proper accounting and proper disclosure for that. for those subsequent events. Also, get a written representation from the management that all subsequent events have been properly disclosed, accounted, adjusted, all that stuff. This will clean your matter. This is simple because you have not issued the audit report yet. So if you want, you can immediately change the audit report and give a new one. But what happens when the audit report has been issued? When you have audit report that is issued, so what happens at that point of time? அப்படின்னா அங்கேயும் ரெண்டு ஸ்பிளிட் இருக்கு. என்னது, before the issue of financial statements and after the issue of financial statements. So if you look here, they're talking about before issue of financial statements. Why is the split required, Apina? So date of financial statement, date of audit report, issue of financial statements. So let us assume this is 31st March. This is by July. Issue of financial statements எப்போ நடக்கும்? Generally AGM is when the financial statements are issued, or maybe 21 days before that. 21 days before that the notice will go, but AGM is when the financial statements are generally issued, isn't it? So for safety, just let us assume 30th September. That's when practically the last date for AGM, right? So let us assume that date. Now, this is what is the scenario. This is a long gap. From 31st March to 30th September, it's a significant gap. And there are a lot of subsequent events that can actually happen during this period. Now, this is the reason why the standard was specifically required, because these things keep happening, and the disclosure of these subsequent events is kind of necessary for the end users to understand and evaluate the financial statements. It gives them a better perspective in understanding. That is the reason there is specific standard on this particular subject matter. Now, so the fact is known after the audit report and before the financial statements. What exactly the auditor has to do, Dina? In general, the auditor has no obligation. This is an interesting aspect. It says the standard is giving the auditor a legal right, saying, boss, you are not legally obliged because you have issued the audit report. Okay. You have issued the audit report. So legally there will be no repercussions. There will be no legal obligations from your end. But if the matter is significant, or if the aspects are material, in those cases, what are the activities that we can do is have a discussion, then determine if there is a need to amendment under the general Dina. They will do it only if it is significant or material. Significant or material is the basic criteria for the amendment. Otherwise, for small things, they will naturally not do the amendments. So if the management is willing to amend the financial statements, then You need to decide how they are proceeding, based on which you can have a discussion as to how you will proceed. So inquire how management intends to address the matter in the financial statements. First, you understand what the management is trying to do, because there is two sides to this. You reporting about it and then the management reporting about it. So you cannot follow two different paths. You both have to be on the same page. So first you discuss with them as to if whether there is a need for amendment. If there is a need for amendment, how are they going to go about it? So let's say the management has decided to go ahead and amend the statements. Then what we are expected to do is, we naturally have to change the audit report, and we have to uh, carry out the additional audit procedures so that the amended financial statements also come into our purview. If the amendment was not required, there was no liability on the auditor's part. But since there is an amended financial statement, our audit report also has to be amended to that financial statement, amended financial statement, isn't it? So, first thing is extend procedures to date of new report and provide a new audit report or amended financial statements. So this is compulsory. If the management has amended the financial statements, we also have to amend the audit report. So instead of amend, there are two things that auditor can do. Either provide a new audit report. That means completely revise the things and don't make it look like it was an amendment. You simply issue a new audit report. Or amend the audit report to include an additional date restricted to that amendment. To include an additional date restricted to that amendment and include an emphasis of matter or other matter paragraph. Abhina, how does this look, Abhina? In the audit report, what they will say is, in the emphasis of matter paragraph, there is a paragraph called emphasis of matter in the financial statements. What paragraphs are there in the financial statements? It will be discussed in SA 700 series. One of the paragraphs is on emphasis of matter. Emphasis of matter, what is that? Why is it required? We will discuss about that again in SA 700 series. But for now, just remember that this is how it will look if there is an amendment. The audit report has been amended with respect to the recoverability of the assets of the entity. The financial statements have been amended to account for the non-recoverability of, let's say, some INR 10 lakhs. We have carried out adequate audit procedures to ensure these are properly accounted and disclosed. This is what the emphasis of matter paragraph will look like. So the entire audit report is there, and then there is one point which you are putting in saying, with respect to, specifically with respect to non-recoverability of assets of 10 lakhs, there was a requirement, and you will anyways give a further detail as to what exactly happened, which customer this is from, what exactly is this scenario, all that details will be given. So this we will say that we have carried out procedures and ensured the disclosures have happened. So for this amendment, you will write a date. So this date, this has been modified on amended on this audit report has been amended on so and so date. Let's say this is before the issue of financial statements. So let's talk about something like 15th September with respect to this paragraph. So இந்த மாதிரி ஏதாவது இருக்கலாம். So where they say the amendment is particularly applicable only with respect to the matter discussed in this paragraph. Abdina, it will clearly state in the emphasis of matter. That means now what has happened, the entire audit report will be understood in a general manner. And then when you come to the emphasis of matter, they will say, except for this point, the entire audit report is dated so and so. But only this point we have amended later on, and this is the particular audit report. So let's have a recall what to do. So in case there is a fact or a subsequent event after the audit report but before the financial statements, then generally auditor has no obligations. But if it is a significant matter or a material matter, then you need to sit with the management and discuss as to how they are going to take up this, how they are planning to take this up. So if they plan to amend the financial statements, naturally you also have to change your audit report. No, changing your audit report depends upon you. How to what extent you want to change the audit report. Do you want to issue a new audit report, or do you want to simply include one additional paragraph in the emphasis of matter and say, this event has happened, this things have happened, this is what is the status, this is what is this thing, and the audit report is amended only with respect to this particular point. Rest of the points, the audit report date is so and so. Or paragraph kodata, that becomes your amended audit report. Now, what happens when auditor refuses the amendment of financial statements? Here, what is the intention is, Abdina? There is a requirement for amendment, but the management is refusing. Requirement to amend the financial statements, but the management is refusing. In that case, what the auditor is supposed to do? Modify the audit report if not yet provided to the entity. Modify. Like I said, unmodified, unqualified opinion is the most commonly issued audit report. Almost all of the audit reports that we issue are called as unmodified, unqualified. But if there is any significant change that needs to be brought to the notice of the management or brought to the notice of the investors or the end users, then you give something called as a modified or a qualified opinion. Okay, modified or a qualified opinion. What is modification? What is qualification? All that we will discuss. But just remember here that if there is a refusal from the management to amend the financial statements, then they will definitely, the auditor has to definitely issue a modified audit report. So it has to be a modified qualified. Unmodified unqualified வந்து modified qualified audit report ஆயிடும் அப்போ. That will immediately send a alert bells in the investor market. Now, if the report already issued, notify to management and those charged with governance not to issue the financial statements to the third parties. So when do we generally issue the statements to the third parties? That is on the date of AGM. So since the date of AGM has not happened, you convey to the management that you will issue a revised report and not to issue the financial statements to the public. Now, if those statements go outside in the public, the auditor will be at fault. That is the general presumption, isn't it? So, auditor has to take steps to ensure that these changes are properly reflecting in their audit report. And that is why, if the management still goes ahead and issues the financial statements, then take appropriate action to prevent reliance on auditor's report. That means the auditor might have to send a statement to the stock exchange, SEBI, government, all these bodies, auditor has to send out a notice saying these are the events that have happened because of which there is a requirement to amend the financial statements, but the management is refusing to amend. And on top of that, they have refused the request to stop the spread of financial statements, stop the issue of financial statements. So both events have happened. Amendment is also not happening, and the issue of financial statements was also not stopped. So please take these up. Take request the authorities to take the necessary action. Abdina or a letter the auditor will submit to the stock exchange, SEBI, government, MCA. If it is a bank, then RBI. All these things needs to be done by the auditor. So now, till now, what we had seen is if the audit report is issued, but the financial statements are not issued. Since the financial statements are not issued, there is still scope for amendment. There is still scope for stopping the issue of financial statements. So there are two aspects here. If the financial statements are not issued, there are two aspects. One is requirement for amendment of the financial statements, and second, to think whether to give those financial statements to to issue or publish those financial statements in the AGM. So these two things will be the major aspects that will be discussed. If they are not complying or auditor is not satisfied with the actions of the management, then auditor has to take necessary steps and notify the investors. So the very reason of hiring an investor is because the auditor is because the investors want to know whether there is a true and fair view coming from the financial statements. When there is not, when the true and fair view is being affected, naturally the auditor has to take steps to ensure that this information goes to the investors. So that is why there needs to be an appropriate action. Next, now think of the scenarios or instances where the date of financial statements is gone, the audit report is also issued, and the financial statements are also issued to the public. In that case, what do we do? Now, see, again, in general, auditor has no obligation, but if it is a significant matter, it is the responsibility of the auditor. Okay, it is the responsibility of the auditor to ensure that the investors are getting the right information, isn't it? That is what professionalism is all about. எனக்கு என் மேல லீகல் ஆப்ளிகேஷன் எதுவுமே கிடையாது சொல்லிட்டு the auditor can leave and ignore that point. But your whole the very purpose of hiring an auditor is because the investors, the end users want a true and fair view of the statements. So as a profession, as a professional, as a person of integrity, it should hit you that if I'm not modifying my report, if I'm not bringing it to the notice of the public, then they will take wrong decisions. They will make wrong choices. They will make wrong analysis. So it is on me, on my conscience to issue the right, to do the right thing. And rather that should come from within the auditor. So in case there is a significant matter, again discuss, determine if there is a need and see how the management wants to treat that. So if the management is happy with the amendment, then you also audit those amended financial statements. Now, here is the catch. There and here, there is a slight modification where since they have since this is after the issue of financial statements, auditor also needs to ensure that the revised financial statements are actually going into the public. Here earlier there was no requirement for this because it was before the issue of the financial statements. But now we are talking about a scenario which is after the issue of the financial statements. That is why we need to ensure that the revised amended financial statements are also going out to the public under the auditor needs to ensure that. Anyways, naturally, we will either provide a new report or amend the audit report by discussing these things in the emphasis of matter or other matter paragraph. Again, if they are refusing, then notify to the management and those charged with the governance that auditor will seek to prevent reliance on the auditor's report. That means auditor will take necessary steps and go into the market and tell people that boss, do not rely on these financial statements. Again, the auditor will go and tell in the market. Now, if management or those charged with governance does not take necessary steps, then take appropriate action to prevent a reliance on the auditor's report. The only thing that is difference between before financial statements and after financial statements is the fact that the auditor needs to ensure that those revised amended financial statements are actually going to the public. If the management is not taking those actions, then the auditor is a respected professional in the market, and a letter from the auditor's office will definitely be taken seriously by maybe by the stock exchanges, by the MCA. All these people will take these things seriously because that is the very power of being a chartered accountant. You are considered in the highest capacity because of the professionalism, because of the integrity, because of the independence that the chartered accountants are supposed to bring to the profession as well as the industry. So we are required to ensure that these things are going out ethically, legally. These things must go out and are brought to the notice of the public under the. It needs to come from within the auditor as well. So this is what it is about subsequent events. So subsequent events under there are three particular dates that we are looking at: date of financial statements, date of audit report, and issue of financial statements. So date of financial statements anyways is the basic benchmark for us. Anything happening after that becomes a subsequent event. Simplest example, issue of dividend. It is issued for the year, but it is never calculated during the period of the year. It is only calculated later on. Bonus issue பண்றது அதுக்கப்புறமா any like I said, all those events that could probably happen. So they are only limited example. A number of events can happen. So these things, if you are if it is before the audit report, then simple thing is you anyways have not issued the audit report. The only thing you need to do is ensure that they have accounted that properly. They have given the proper disclosures. That is the main thing. First is identification of the subsequent event, then ensure you have audited it properly and getting a written representation. These are the main things. Second thing is, if the the audit report is issued, then if the financial statements have not been issued, then ensure that the amendment of the financial statements and the audit report happens. But if the financial statements have been issued, ensure the amendment of financials happens, amendment of audit report happens, and more importantly, ensure that the amended financial statements are also sent out to the public. The company has to again give a notice in the public and say, we have amended the financial statements. Please go through the amended financial statements. So that's all with respect to the standard SA 560 on subsequent events. So we will stop here for the day. We will meet in the subsequent class. Thank you and have a good day.
Thank you.
Thank you.